Okay, let's talk about taxes. It's a stressful time of year for pretty much everyone. But when you start adding investments into the mix, wow, it can feel like a whole different language. So in this explainer, we're going to demystify it. We're breaking down the must-have tax documents that every single investor needs to know about. By the time we're done, you're going to feel a lot more confident about filing. So you've got a brokerage account, maybe you've been buying some stocks, maybe you've even dabbled in crypto. That's awesome. But here's the real question, the one that matters right now. Are you ready for what that means come tax time? Because you can bet the IRS is paying attention. And let's be super clear about what's at stake here. This isn't just a friendly suggestion. It's a hard and fast rule. Forgetting to report your investment income, that's just not an option. The consequences could be some nasty penalties, or finding out that refund you were counting on is a lot smaller than you thought. At its heart, the idea is actually pretty simple. When your investments make your money, through interest or dividends, or when you sell something for a profit, well, that's income. And just like the paycheck from your job, you've got to report it to the government. The good news is your financial institutions will send you the forms that lay it all out for you. And speaking of good news, here's some more. While it might seem like there are a million different forms out there, for most of us investors, it really boils down to 3 key documents. We're calling them the big 3 because you absolutely cannot ignore them. They're the foundation of your entire investment tax reporting. So here they are. You've got the 1099 INT, which is all about interest. Then there's the 1099 DIV for dividends. And finally, the 1099B, that's for when you sell investments and have either gains or losses. Seriously, for most people, these 3 forms are going to cover almost everything you did with your investments last year. And here's a pro tip that is going to save you a ton of confusion. Most of the big brokerages don't actually mail you 3 separate envelopes. Nope, they package everything together into one big document. It's usually called a consolidated 1099. Just think of it as your all-in-one, one-stop shop for all your tax info from that account. Okay, so you get the forms in the mail or in your inbox. But what do they actually mean? What are all these boxes and numbers telling you? Let's break down each of the big 3 right now so you know exactly what you're looking at and why it's so important for your tax return. First up is Form 1099 INT. Honestly, this one is probably the most straightforward of the bunch. It's basically a report card for any interest you've earned, maybe from a savings account, a CD, or even just from uninvested cash sitting in your brokerage account. The number you're looking for is right there in box 1, and that income gets taxed at your regular income tax rate, just like your salary. Next, we've got the 1099 DIV. If you own stocks or mutual funds, you've probably gotten paid dividends, right? That's your slice of the company's profits. This form summarizes all of those payments. Now, here's a super important detail. You'll see box 1A for your total dividends, but you really want to look for box 1B for qualified dividends. Why? Because qualified dividends get taxed at a much lower rate. Paying attention to this little box can save you some serious cash. And finally, the heavy hitter, Form 1099B. This one is absolutely crucial. Anytime you sell an investment, this form comes into play. It lists out all of your transactions and shows whether you made a profit, that's a capital gain, or if you took a loss. Your brokerage usually breaks it down into short-term gains, which are taxed like your regular income, and long-term gains, which get that sweet, lower tax rate. And yes, for everyone wondering, this absolutely 100% applies to crypto. So this little chart brings it all together, right? You can see each form, what it's for, and who sends it to you. It's a perfect little cheat sheet. Just remember, INT is for interest, DIV is for dividends, and BS is for all your buys and sells. Simple as that. Okay, you've got the basics of the big 3 down. But let's be real, taxes are full of weird little rules and tricky spots. So let's dive into some of the most common traps and special situations that can trip up even experienced investors. All right, here's a classic mistake. You're super on top of things, eager to get that refund. So the second your W-2 shows up at the end of January, you file your taxes. Sounds like a good idea, right? Getting it done early? Well, maybe not. And here's why. While your job has to get you your W-2 by January 31st, your brokerage has a different deadline. They often have until February 15th to send out your 1099s. If you jump the gun and file too early, you're almost certainly going to have to file an amended return later on. And trust me, that is a huge pain you want to avoid. Now for a very modern-day problem. You were active on a crypto exchange last year, making trades, but tax season rolls around and nothing. You never get a 1099B form. So does that mean you're off the hook? Free money? No, absolutely not. The responsibility to report your income is always on you, whether you get a neat little form or not. If an exchange doesn't send you a 1099, you are still legally required to go back, calculate your gains and losses yourself, and report them on your tax return. Never, ever assume that a missing form means the income is invisible to the IRS. It isn't. Now, beyond our big three, you might see a few other documents floating around. A 1099-R, for example, if you took money out of a 401k or an IRA, or a K-1 if you're part of a partnership, maybe even a 1099 MISC. It's just good to be aware that these exist so you're not caught off guard if one shows up. And one last tip. Remember those convenient all-in-one consolidated statements? They're great, but they can also be really long and dense. It is so easy to scroll right past the 1099 INT section or miss the breakdown of your different dividend types. Always take a minute to give it a second look and make sure you've accounted for every single section. All right, we have been through a lot. We've covered the key forms, the deadlines, and the common traps to avoid. So when you put it all together, what's the single most important thing to remember before you hit that file button? It's this, right here. Being thorough is everything. It's your single best defense against getting that dreaded notice from the IRS saying you owe more money plus penalties and interest. Taking a little extra time right now to gather all your documents and double-check everything will save you so many headaches down the road. So as you start gathering up your 1099s, here's a final thought to leave you with. Getting all the paperwork together? That's just step one. The real question is, are you ready for the story those documents tell about your financial year? Because understanding that story is what will help you make even smarter investment decisions next year.